We're going to begin here with our first Friday Investment Talk live, 9 p.m. Moscow time, 11 a.m. in California. Markets are finishing another bullish week, beginning of July, bullish here as expected. Veronica's going to start with the talk about the pandemic and where we are in the pandemic. Then Alan's going to take off on the UK and Europe for a while, and then we'll visit the US markets at the end. So let's turn this over to Veronica. Go ahead, Veron.
Yeah. Hi, everyone. Well, we all wondered when pandemic started, we all have wondered when the world will return back to normal. So there is actually a normalcy index that is devised by the Economist, and right now I'm showing the graph of it. And the Economist index covers 50 of the world's largest economies that together account for 90% of global GDP and 76% of the population. And it's actually population weighted. So it's not something new, it's been around for a while. And if we look at the pre-COVID level at 100% normalcy, then the global normalcy index plummeted in March 2020 to 35 level. And then it's been gradually improving since April. And today it stands at 66 level. Overall, across most of the countries, it's 66. So we kind of halfway back to pre-COVID norms. And let's look at the index by the activities. And we can see like retail, office use, public transport, road traffic, flights, and cinema. And especially it's kind of interesting how it, I'll zoom in on this graph, and we'll see how this index was by activity, its dynamics. And what's interesting, look at the cinema. It spiked in March for some reason. Was it Oscars or some sort? It just went over 100 people.
No, everybody wanted to go to the movies and they did it once.
Yeah, they did it once.
They ran out to the movies once and that was like good enough. That was terrible.
Yeah, the cinema normalcy index is kind of goes all over the place, but everywhere else it's gradually going up. But are we going to be back to normal? 100%, probably it's going to be new normal. Like there's a huge element of being at home, there is a home is part of our offices now, even if we go to the office. So no wonder also house prices went up like 23%. But if we look also at this index by countries, which is also interested what's going on, and I'll open up to show all the countries in this index. And the countries that quite high are Hong Kong and New Zealand, that are two places that have implemented effective measures against the coronavirus and actually suffered relatively few deaths. They are at the top of the table, and the ones that on the bottom of this table are Malaysia, which is suffering from deadly wave of infections caused by the more transmittable Delta variant at the moment. So that's why it sits on the bottom. And
India's down there too. India, Argentina. Yeah.
So again, we're kind of halfway back to pre-COVID norms. And right now, it's also the Economist published another interesting article that it's compared, a lot of economists around the world from different countries, they compare the estimates of the costs of lockdowns with those of the benefits. So maybe we can look at those costs for the country and how it affected GDP levels in these countries next time. But that's it for me for today.
Okay. So Alan, let's go back and review what's going on in Europe. There was some interesting.
Yeah, I think just to pick up on that. I mean, we're going to have a look at the UK. Start off with that very briefly, in a way, because that was something we looked at last week. For those of you who watched and basically the UK is a very interesting place now because it has one of the highest vaccination rates. So I think it's something like 70% of adults have the vaccination, at least one dose, and in fact very high. I think it's over 50% of adults have 2 doses. But as you can see, the last graph there, Chris, that there was a big decrease in consumer spending, in household spending last month, basically because there was other lockdown measures. There's just a lot of uncertainty going on. So what we're finding is there's a lot of, again, through this Delta variant, there's a lot of cases in the UK. There's actually more cases in the UK today than there is in the whole of the European Union put together. So it's really quite serious, but there isn't a corresponding spike in hospitalizations, and there isn't a corresponding spike in deaths. Now, obviously, there's a small lag indicator, lag time between those 3 variables, but because people have been vaccinated, or many people have been vaccinated, it's expected that there won't be the deaths and there won't be the hospitalization rates that certainly was previously in the UK and currently in other countries like Brazil, Russia, and India, where the vaccination rates are not very high. There's a 30-year period where the UK FTSE is trading at a more than 40% discount to its global peers. I mean, that's a huge discount. So it's sooner or later that's going to right itself. And we're, anyone that we've mentioned to clients that have GBP, we've mentioned it's a good time to buy FTSE 250, FTSE 100. There's other variables as well, but certainly, as Veronica pointed out, the reopening up of the economy is quite a major factor. But it's still not certain, and actually Eurozone as well are still struggling a little bit. The actual headline figures in the Eurozone were not great. If you can just keep flicking, so I think next 2 down is that one. The CPI rate dipped below 2%, and the core CPI is below 1%. Now, that's not necessarily a bad thing, but it's just, again, we've discussed on the Friday Investment Talk before that actually we want to see higher rates of inflation in the short term, because that's a sign that the economies are opening up again. And we really need to see that. We need to see inflation overshoot, at least for a short period of time, before it kind of comes back down to a mean. But if it's not going to go above 1 or 2%, it's a bit of a struggle, even in the Eurozone. But the Eurozone is, historically, 2% Eurozone was
it was a dream.
Yeah, it is. It's been the dream of the EU central bank.
Either central bankers for I think for 5 generations. Yeah,
exactly. So, and actually, if you look at the figures more closely, apart from those 2 figures, they're actually mostly pretty positive. So you've got Italy and France, which are the graphs there. The CPI is well above 1%. Which is very good for both those countries. The German unemployment rate was, there was a reduction in unemployment rate of 38, whereas actually was expected to only be 20. So that was a huge outperformance, and that was a big fill up to the German markets this week. But French consumer spending, which I think is a little bit further down, basically is also very, very good. And then we've got the Netherlands. I mean, look at that as a graph. I mean, that's incredible. 140 is never, it's not even hardly ever been over 130. We're almost 140. This is the retail sales index in Holland, and people are spending money. They're coming out of COVID. They're coming out of lockdown, and they're spending money. And we're seeing that again and again over throughout the Eurozone. And I mean, that's positive. But whether it continues. It's interesting when Veronica's, mentioning the graphs in The Economist, where it's a reopening, and we think it's only going to go one way. So it's 66%, and it should go towards 100. But actually, some countries, such as Russia, they're actually, regressing a little bit. That they're putting more restrictive measures again, and Russia's not the only one. So we're not just picking on them. So it's still going to be a bit of a struggle. That's to get that 66 moving up. Eurozone is still very slow in vaccination rates, and until it's done, they actually unveiled this week speaking from a personal perspective, the European electronic vaccination app. So basically, if you had double vaccines in the European Union, you can log in and register for this app, and it's Europe-wide. So it should allow you to travel quite easily and go on holiday and things, which is exactly what they want people to do. So let's see if that works. But that's basically what we're seeing in Europe. Let's hope it's not a false dawn. Let's
right. I think really what you said that England is Scotland and Wales are about 50% fully vaccinated, and that's way ahead of what.
Double vaccination.
Yeah, double vaccination. So it's way ahead of what Europe is, and I think America's around 60%. I think not. I was just looking at the charts yesterday, but it's places.
The US is pretty much it's the same as the UK, and Israel's another big one. Malta's good, Hungary's good. But there's some countries that are, even in the Eurozone, there's some countries that are still at 25, 30% of double.
And it's all about how the Delta variant is going to react with some of these vaccines, because we saw news this week in the Seychelles, 6 people who were vaccinated died actually of the Delta variant, and that's because they had Sinovac and AstraZeneca, or kind of a variant made of AstraZeneca in India. And so there's really some caution around some of these like emerging market type of vaccines and how they actually perform. So we'll see how that plays out. Seychelles is one of the most vaccinated, or if it's not the most, it is probably the most vaccinated country in the world. So to see these things come up and then deaths again is quite scary.
It's interesting that in the emerging markets like Brazil, a lot of people lose their trust in government and in vaccines. So they're not only not vaccinated against COVID, the rates of vaccination dropped, like in polio, tuberculosis, like hepatitis.
Diseases which were almost eradicated.
Yeah, here's this great article from National Geographic.
This is especially the new generation in many countries and emerging markets. The millennials, they had no idea what kind of diseases used to be, so it's
really scary. 100% vaccination coverage was back in 2015, only 6 years ago, for tuberculosis, and now we're less. 25% of the population is not vaccinated against tuberculosis. Hepatitis B. Look at these numbers. This is scary, life-threatening disease that a lot of people don't expect to happen, right? Polio, meningitis C, or these are hepatitis A. These are all things that now, if they do have a comeback, at least 25% of the population is not prepared for these things. So emerging markets could be struggling more with COVID and the repercussions of COVID later on.
Polio was effectively eradicated, and then people said, "Well, polio is effectively eradicated. Why would I get vaccinated against it?" You're like, well,
the title right here is
young people. It's eradicated.
Young people don't know the risks of eradicated diseases. They're still there. So it really is kind of a good article.
And let's I don't think we have time to go into the propaganda and the scare fake news and scare stories that are swirling around social media, which I think have a big effect as well.
All right, so there's been a lot to discuss here in terms of coronavirus, in terms of the UK and EU. I want to go into the US now, kind of a quick dive. We're going to start with the economic numbers here. The US came out with non-farm payrolls and its unemployment rate, and unemployment rate went up. But the big number here is the non-farm payrolls, much higher than expectations. It was forecast for just over 700,000. The range was up to 1 million, but we came in at 850,000. So quite a big number. Bullish for the economy opening. Earnings weren't up as much as expected, so they're not very inflationary in terms of the wages being paid for people to return to work. So it looks pretty positive. S&P 500 reacted well.
I have a question, Chris. I don't know if you know the answer. Genuinely don't know if you know the answer to this. But how can unemployment rate or the rate be going up? So 850,000 jobs were created, but yet the unemployment rate goes up from 5.8 to 5.9.
More people are seeking employment. Okay, there's a lot of jobs to take those people in, but a lot of people, like we talked about before, are coming off the dole. I mean, basically, they're coming off the life support systems, right? The furloughs, and well, not only that, but the government support systems, and more and more that'll happen. And so you're going to see probably increases in unemployment rate. At the same time, we see huge numbers in terms
more
of
jobs being created,
more jobs being created.
Filled.
So it's just right.
Something like 9.3 million jobs available right now in America. I read that earlier on today.
Is that what you read? I hadn't seen that number.
Yeah.
I hadn't seen that.
I
know there's a lot. I wonder if they have the number here. We can look at real quick.
They were saying that they're offering some hospitality industries are offering $27 an hour plus tips.
Yeah, and look where the jobs are, Alan. May 67,000 jobs created in hospitality. June 188, triple.
Yeah.
Okay,
so it's reopening basically.
It's travel. It's travel related in the summer. It's
airline sector completely understaffed.
Yeah,
because they cannot even get back to normal.
Yeah, they're really struggling to fill those jobs. I read that they were incentivizing jobs from $100 to actually sign. So for people, the incentive for people to actually accept the job, they were incentive bonuses to sign from $100 up to $30,000 just to sign for a job.
Right. If you do a deep dive into the numbers, you can see services are up. That was what was up, right? Retail trade was up, tripled pretty much. Business tripled. Temporary help went from negative to positive 33,000. A lot of big numbers here in terms of leisure and hospitality. And like I showed before, these big numbers were people going back to this summer kind of vacationing. You had government workers, huge, which you're going to get a lot of criticism for. But what's not happening, and this is kind of the scary part, is manufacturing. I don't know if you can see that here, but manufacturing numbers actually went down. Yeah. And so that's where you're going to see, is it really the economy returning to full normal? And it's really not. They can't find the workers to come back to the shops and make, whether it's airplane parts to. But
is that because the jobs are not there, or there isn't? The people don't want to fill them.
Just from my contacts in the industry, people are saying, "Look, we can't hire. We can't hire the people we laid off. It was stupid to lay them off, but we were almost forced to, because we didn't know how long the pandemic would last. So we were being pushed by shareholders.
Just the paperwork, all the procedures.
And now they're like, these people are they retired. A lot of them just retired.
I heard that. Yeah, there's a lot of early retirement.
A lot of early retirement, and I don't have the statistics. Maybe we can bring that up next time. But there's a lot of early retirement. A lot of people who said, "Look, I found another job consulting, or I opened up a shop. Maybe I moved into the service sector myself because it was easier." So now I'm not interested in going back to the machine shop, and that's it. So you have this unemployment rate that went up. The civilian labor force went up, but the civilian unemployed went down. The civilian unemployed went down. So a lot of this is also a mixture of I got a government job, and so you wonder how much of these people went into consulting or working for the military or something like that. So let's talk about what the markets have done something rather special. Let's start with the short term. I'm going to open this up real quick. Well, first of all, the markets have performed well in a very streaky way. In other words, they've done 7 days S&P as of yesterday. So today it's 8 days of positives, consecutive all-time highs, which is rare. I mean, you don't see that many times that the market will 7 or 8 days in a row make all-time highs. The index, the Russell is weaker, but it did make 4 days of all-time highs up until yesterday. And then the Nasdaq a couple of weeks ago made its own 7-day streak. So there's been a little bit of analysis around that, and just to show you how many times that's happened. The S&P has done that 18 times in its history. 8 days is only 12 times in its history. So these are generally bullish times. The Nasdaq has done it 27 times. They've had 7 days in a row. I think they're up to 9 days in a row now. So it's only 9 times. Really rare when we get these constant all-time high, moves. I mean, and it didn't take much. I mean, the S&P, was up 0.2% or something like that. It's not like this market's going crazy. It's just that it's just constantly building on its gains. We've seen that because of the economic news coming out. We've seen that because of the expectations being met with inflation and jobs after the Federal Reserve scared everybody. So here's what we've seen in the last month. Okay,
Is
in the last 30
is
days.
there a breadth to the strength, Grant?
And I'm going to talk about that in a second, Alan. But right now, I'm going to show you that the market has bifurcated. In other words, I don't even know if that's I said it right or if that's the real word, but
yeah, bifurcated.
there's a split. So the Nasdaq in the last 30 days has been up almost 7%. Nasdaq Composite, doing really well. The Russell was up and then it's fallen back now. S&P is kind of trailing, but the equal weighted S&P and the Dow are not performing well. And we talked about that because they're more weighted to value sectors like Caterpillar and Dow, what we talked about last week. So we're seeing this market really take off in terms of the top performing stocks, the top Nasdaq performing stocks. And now one other thing before we go into some stocks real quick here at the end, this cool chart of how often we see indexes have positive momentum. In other words, positive months repeatedly, one after another. How often this happens. And we're right now in this period where we have 12 consecutive months. June last year started the positive period after the COVID. And it's been 12 months since we've had a negative month. And that's pretty amazing because you don't see that happen very often without a negative month coming in and wrecking it. So I would say if July is positive, as we expect, we'd get up to the 13 number, and that would probably be it. I don't expect, as we talked about, this thing to last until the going into August and September. So we'll see how it works, but we're up in these lofty areas where the market has been consecutively positive on a daily basis and then on a monthly basis. So generally bullish, no reason to panic yet, but be careful here as things are getting extremely overbought. Some stocks that I have or that we usually look at and like to bring up. Ford here is basing. We've mentioned Ford before. This, if you look on a longer term chart, is very powerful, very bullish. And as long as it doesn't go down here much below the 15 level, we are good for probably another run up to 16 soon. We see a lot of call buying actually today in even the weekly calls for next week and in the following weeks. There was an upgrade in one of our stocks that we talk about somewhat consistently is Rolls-Royce. This stock has been beat up, but Morgan Stanley today had a pretty good upgrade. And this stock's getting a bit of a lift today. Beat up levels. If you look at this stock, it's just amazing, this chart. Look at this chart, Alan. This is quite amazing.
Yeah, we have some clients in it, so
look at this. This is the weekly chart of it. This is just, it's worthless. It's just everybody thinks this company is worthless. So it's quite interesting to see.
Rolls-Royce needs an electric car.
They need a hydrogen engine.
Hydrogen fuel. They need to be bought out is what needs to happen here.
Yeah.
So that's interesting. I'm going to point out here Amazon, because this looks like it's going to break out. We mentioned before this is this, if you look in close here on a daily basis, where's my Amazon chart? Yeah, this is the daily chart. It's right up against this again, fell back from this box level and really didn't go back far. And today it's up a good 1.6%, likely to break out and follow its good friends in the Nasdaq index, Google, which continues to go higher. Nice breakout today. I don't know if you can see that tiny little thing. I'll bring it up here, but you can see it now. Big days moving here strongly recently. And of course, our friend Microsoft. So these are the market leaders. This is what's really moving the market. Big breakout today, up another 2% today to all-time highs. Just resilient, strong stocks that COVID, non-COVID seem to drag the market higher. AMD is a stock that's worth watching for a breakout. We looked at this previously. We've been bullish on this for a while now as it pulled back here. Semiconductors in general have been performing well, and AMD is a big leader in that. It's taking market share from Intel, and this is likely to go out and break a new all-time high. We see pickup in option buying, especially in November 110 calls, which would be somewhere way up here already. So, they're expecting this to ride to summer. Alan, I have to bring up your most hated stock, but this thing is incredible. Virgin Galactic, with a successful launch, really took off here. It's now bouncing higher again today after it's pulled back to where it broke out from. Don't know how much further this can go, but Kathy Woods sold it somewhere down here, and since then it's just been on a rocket ship. And the last stock I want to look at really quick is Johnson and Johnson. You mentioned, Veronica, the interest in the emerging markets, right? The emerging markets. What are they going to do for a vaccine? And really, what's happening here, if I can put this on a weekly chart, is this is likely to go up and make a new all-time high. And today's move is quite pronounced. It's this week it was up strongly, and today it's up another 2.8% on an upgrade. They just got news that they have it's called a Janssen COVID-19 vaccine, and it works better actually against the Delta variant than it does against the Beta variant, and it had testing in South Africa. We know Africa is really falling behind in terms of its COVID vaccination rate. So this is really doing well and likely to break out here to a new all-time high very, very soon. We see again a lot of interest in this stock. So those are the stocks I have. That was the market wrap we do. Alan, you wanted to talk. We have 5 more minutes. Let's just spend 5 minutes.
Yeah, you want me to go into it?
Yeah, and just go into like the warning.
Whiskey.
Let's get away from vaccine. Maybe the best prevention against the vaccine is just whiskey.
Yeah, exactly. We'll finish off our Friday night talk with a little whiskey. I mean, so actually, I'm going to do a blog on this, and guys can look out for that coming out probably next week. So this was actually an article that was written by a family friend of ours back in Scotland, a guy called Blair Bowman. He's actually a kind of whiskey. First of all, he's a whiskey connoisseur. He actually had the idea of creating the World Whiskey Day, and he basically patented that and created it about 10 years ago, only 10 years ago, because no one had thought about making a World Whiskey Day before that. So, and what was interesting, what he wrote about in this article in the Whiskey Trade magazine that he sent to me was basically something very similar that Chris and Veronica and others in the company are familiar with. There was a lot of themes that I read here that are like him ringing, and he's not got an experience in finance like we have, of really red flags. He called it a train crash. He said a train crash is coming. Succession of red flags that so casks are these things that you can see. They're the whiskey version
barrels.
of
barrels. Yeah, exactly.
Of a wine barrel. These are whiskey casks, and actually they're usually ex-wine barrels. That's why whiskey gets such diverse taste, because you're using rum casks, you're using Porto casks. Yeah, you're using Oloroso and all of these fantastic wine flavors, and that's what comes through in the whiskey. Okay, we're not going to go down that route, but basically,
Alan, we know too much about this.
Yeah,
let's get to the scary part.
Yeah, let's get back to it. So yeah, you gave me 5 minutes, so I'll run through. So basically, there's like 4 or 5 points that, again, see if these sound familiar, guys. So people making very high performance targets. So 582% expected return over 10 years. Okay. That's what they said. Now, the whole premise is that you invest in a cask, and obviously you keep that for, you don't keep whiskey for less than 10, or it has to sit, it has to lie is the technical word, for 10 years. And obviously, if it's 12 years, it's 20 years, it's 25 years, it's 30 years. The longer it goes, the better, the more stronger the whiskey is, the alcohol comes through, blah, blah, blah. So he's saying that they've 582%. These guys are saying if you buy this cask, that's the returns you can expect. And he said they've taken one figure out of context. It's from the Knight Frank Luxury Investments Index, and it's basically not from standardized casks, but from high quality, very, very rare bottlings. And these are, so it can be done. The Knight Frank say that this was an actual performance, but it's like very rare that definitely everyone's going to do it. So that's kind of one thing. The other is guaranteed returns. We've all known about guaranteed returns. Can't happen. It's not backed by anything. But these guys are giving a 9.5% guaranteed return over 10 years. So you invest £10,000, and basically in 10 years you get 25,000 back.
So there's companies pitching this stuff, Alan. Yeah,
absolutely. AVC have been approached, and this was one of the real reasons for my article, is that these things are out there, and investors are interested, clients are interested in these.
Yeah. Well, wouldn't you be if somebody promised you a 10-year bond?
It can be an interesting. It can be an interesting thing to get into, but if you don't know what you're doing and you get blinded, as like everything, you get the idea.
Blinded by risky.
And basically, he's pointing out the jurisdictions that these companies are basing themselves in. Stop me then when it sounds familiar. The jurisdictions where are legally difficult to pursue a case for mis-selling.
Perfect for investment.
Exactly. He draws similarities with a situation in Australia a number of years ago called the Australian Wine Investments and a company called NANT, N-A-N-T Whiskey Group, which basically they were, selling barrels that didn't exist, selling wine at hugely inflated prices, promises that the distillery will buy back your whiskey. There's something called delivery orders. So it's actually because the whiskey doesn't move. And the only way you can track the ownership of it is by something called a DO, a delivery order. And that can be switched multiple times, right? That's how a bond works actually as well. It's just the bond doesn't move, but the coupon the person that holds the bond moves multiple times. But you have to report back. You should report back to the warehouse because it's a government tax bonded warehouse. Don't forget that. It's very highly regulated by every government because that's a huge tax for them. And so it should be reported back, and it's not always being reported back. So the insurance on these casks are staying at the original price, whereas they're being every time they're being traded, they're going at huge multiples. So, he's just saying these are all red flags. They're saying that they're exempt from capital gains tax, for example. He says it can be, but not always, and most of the time not. And even there's situations now where people are selling shares in non-existent distilleries or distilleries that are being built, and so you're actually funding the construction of the distillery. So it was just a really fascinating article to read from a financial point of view, someone who knows the whiskey industry really well. And we just look, Chris and Veronica, we've heard those stories so many times over the last 20 years.
Yeah. We can go into a whole Friday investment talk about how not to get scammed, right? I mean, because we've heard it all. We've put the blogs on our website. We've been sued against putting these blogs on our websites. We've been talked down by lawyers. It's terrible stuff.
This is slander. If you put this on your website, that you're running.
You'll get sued. You'll actually have a lawyer call you up and say, take that down, or we're going to sue you. So I mean, and there's no one protecting people. Just we did car parks.
It's not under the FCA in the UK. It's not under anything.
We can start creating our own blacklist like Russian Central Bank.
Absolutely. Absolutely. As long as we don't the opposite also works. That there are some whiskey cask companies that are very transparent. They're properly regulated as much insofar as they can be regulated. I mean, Blair himself is involved in it. I mean, he makes that disclosure that look, we're not making any promises and we're being very transparent. Because let's be honest, you're buying water that is in a cask that's been treated with barley or oats or something like that, and it's not worth anything. If it's a very famous distillery like a famous wine vineyard, then it can be worth a lot of money in the beginning. But otherwise, you don't know what you're buying. It comes down to that.
Yeah, and I think this whole ownership of the cask itself, when you can resell it and it's not in your name and no one's paying taxes on it, there's going to be tax bills and people are going to crack down and you could just lose it all anyway. So let's wrap it up this week. It was fun to go live for the first time. I see we get a couple of viewers on Facebook and we've got a couple of people who have joined us. So thank you very much for everybody who did. And we'll be back next Friday for more of the investment talk. Stay bullish until it's not bullish. Let's go, guys. Bye. Thank you. Take care.
Bye.
Bye, everyone.